In other business news, it has emerged that an overwhelming number of South Africans are living from hand to mouth. According to the third annual One Life Generational Wealth Survey, over 50% of consumers have taken out a microloan or an advance on their salary to put food on the table. Head of Consumer Service at One Life Insurance, Carol Mazaka, joins us to unpack this further. Thank you so much for your time, Carol. This report is not necessarily telling us anything new about the South African cash-strapped consumer, but it does paint a picture of a widening concern and a heightened level of vulnerability. Talk us through the findings.
Thank you, Tumisang, for having me, and good evening to your listeners and your viewers. It does paint a very bleak picture. I must add, though, up front that there is a glimmer of hope where our consumers are saying they're optimistic in terms of changing their landscape from a financial planning perspective. We saw that 87% of our respondents told us that they are expected to build this generational wealth. And we also saw around 84% of our consumers telling us that they know or they feel that building generational wealth is significant. Although I must add, we saw approximately 31% of our respondents saying that they actually do have side hustles and second jobs, and those contribute approximately over 40% of their monthly income in terms of their disposable income. And a majority, perhaps 57%, and around 51% of our consumers combined are saying they're anxious, they're stressed, they're worried about their expenses. Frankly, all they're trying to do is to survive and put food on the table.
Carol, I'm even more encouraged to talk about the over 80% of respondents that are optimistic about building generational wealth, irrespective of the tough economic climate that we find ourselves in. What I want to find out is the bracket of South African consumer. Who actually is represented there, whether it be age or within a skills profession set that they may have?
So the survey would have combined majority of the demographics if you're looking at segmentation. But what we saw is, from a categories perspective, you cannot hone in on a specific segment as the one that has got this glimmer of hope or is emboldened to say that they can actually get themselves out of this. It was really cutting across our respondents where they were saying, I do see the light in terms of changing my financial being. I do see the light in actually improving my financial stance. And I think just to bring it home, what we were wanting to understand was, what are the very important elements in your life right now, regardless of this very tough economic challenge? And the one important thing that came up was to protect my family and create a legacy for them. And then when we went into detail around what do you deem to be these assets or these elements that create this generational wealth for you, top two, actually, the first one was property and the second one was life insurance. Therefore, our respondents were saying, although we acknowledge where we are currently, we are prepared to change that for our families, to change that for our children. We acknowledge very much so that currently, right now, we are crunched, we are stressed, we financially are stretched, but we do want to change that picture. And that's where we come in to say, you start with what you have wherever you are, because it is really about the actions that we take now that will determine how you leave this generational wealth for your family and your loved ones.
Based on that, can we then say that the near-term outlook is somewhat positive, especially as we are expecting an ease within the economic climate with the lower interest rates and the likes?
Correct. And furthermore, I think it's important to note that the pressures that people saw, our respondents saw, 90% of the respondents were saying majority of their disposable income was around, of course, food and servicing of debt. Again, another 16% talking about transport and electricity. And of course, the majority, which was 51%, was having to deal with home loans and rates and utilities, although they still said, perhaps one could look at how you structure your debt, how you make sure that you can have something that you can put on the side, as little as it can be, to be able to start building block by block this generational wealth that everyone or a majority of our respondents were saying it's important, it's justified, because they do not want the cycle to repeat itself. Just to add on that, we saw that less than 50% of our consumers could not keep their policies in the previous year. And perhaps just to set the scene on that, what that means is that if those breadwinners or if those policyholders were to pass away, it would mean that the cycle then repeats itself, and therefore those families would have to start from scratch and have to start building again from a survival perspective, even before considering the creation of generational wealth.
As a passing shot, now that we are facing the 2024 national budget speech next week, with regards to consumer spending as well as a cushioning for the South African consumer, is there an expectation at the least from that particular event?
So, there's been a lot of speculation, a lot of assumptions around personal income tax, perhaps no changes around there. There is a view in terms of course, talking about our electricity generation. There would be perhaps a touch on climate taxes and, of course, corporate taxes, and just a plethora of things that we can only but speculate at this moment and make all sorts of assumptions, because truly this is a roller coaster. South Africans are between a rock and a hard place, and all we can do is carry the hope and have a glimmer of faith that at some point the tables will turn and we'll find ourselves in at least a much better, a much more safer financial space.
Thank you so much for your contribution. Carol Mazaka is with One Life Insurance talking to us there about their latest report on consumer behavior.